Hello, everyone. Today is Friday, March 18th, 2022. My name is Evan. Welcome back to our weekly stock market analysis video series. If you're brand new to these videos, welcome. Thank you for joining us. Thanks for tuning in. We are still on our condensed shorthand version of these videos. So typically we break things up into two parts. In part one, we've got a big sort of data dump of interesting, notable movement and interesting behavior that's going on beyond price action. But I'm still on the road. I'm traveling. So we're going to just do the part two version of this video series, keep things a little bit brief, and just review the price action and some of the big trends and movement out there. So let's dive right into the S&P 500 daily chart. This is where I'd like to start this week. And this is the view that we recapped last week. So we had this very simple sort of take here where we had lower highs in place starting from the February rally or the February peak up here. And we had a series of higher lows, and we had a little bit of compression, a little bit of a wedge sort of being developed here in the S&P 500. Note, last week we also had the lowest weekly close in the S&P 500. So we had, again, this view of downward to sideways compression with some high volatility. And this week, of course, we had the much anticipated release from the Fed on interest rates and policy in the future. We did get a 25 basis point rate hike, and we basically saw the markets rally throughout the course of this week. Monday was a tough session. We were down 1%. And since, turnaround Tuesday came about, we had a 2% rally in the S&P 500. We saw a follow-through breakout day on Fed Day with a lot of volatility intraday. We broke this downtrend line that we had. We saw more continuation Thursday. We saw more continuation Friday. And we saw these late day rallies and strong closes each of the last four trading sessions. We saw just that bid and pressure to the upside basically appear in the market. So we've got lots of different narratives floating around here. We've got lots of folks, and sentiment seem to be, really clinging on to the idea that this is just a short-term squeeze in the market right now. And this is, just a temporary, move to the upside here. And I'm not going to weigh in on any of that sort of narrative here. We're going to objectively sort of just look at the price action. And when we objectively look at this price action, this was a week to take notice because, again, we did break this downtrend. We did hold the prior lows, and we are above the 4,300 level that we've been keying off of. In fact, we're over 4,400 now. So again, if we now take a bigger picture view of the S&P 500 on a weekly chart, this is a pretty impressive looking candle. I don't know. I didn't have time to look at how when the last time we saw our 6% rally in the S&P 500 was, but it's been a while. This was a very large magnitude move. We took out the prior highs from the past 4 weeks of trading, and we did reclaim some pretty significant support areas, and even now starting to take out some prior resistance areas. We've got this indicator here that we've developed for TC2000, just a very simple, clean, objective look at support and resistance levels of interest. And you can see now for the first time in the past several months, we are now starting to rally over a prior, in this case, short-term, but still significant resistance area around 43.83 in the S&P 500. You can go to the Russell 2000 and look at this same view here. We're starting to challenge and take out prior resistance, and the same thing for the Nasdaq 100. We're starting to rally and take out prior resistance. So we do have some encouraging price action here in the short term for the buyers that support has held, and we are now starting to take out some of that previous resistance. So I do like that. I do think that's bullish. Just as that is happening, we're seeing the VIX fall to 1 month lows here. We've got a VIX now at 24. So we finally broke down from the 30 plus VIX that we were oscillating in for about 3 to 4 weeks. So we got the lowest 1 month weekly closing VIX here we've had in some time. We've got the Fed out of the way. We've got sentiment, which still seems to be very pessimistic on this market. And again, from a longer term perspective, anytime we get these high volatility environments here, I always try and reiterate that time frame matters. And so from a longer term basis, yes, we are not out of the woods yet. I do not want to proclaim here that the bottom is in and it's safe to buy, but I do want to take notice of the bullish developments here, right? If we continue to rally from this point, we should not be surprised at this time, right? We do have some bullish developments that are underway right now. We don't know how long they're going to survive or last. They could, fizzle out early to mid next week. We have some things like a very simple Bollinger Band that we could apply to the S&P 500 chart. And you can see that we're starting to tap our heads on the upper Bollinger Band. So we've basically traveled from the lower band to the upper band. This is generally a spot where, we would expect some resistance or the market to hesitate, especially in a sideways to choppy to down market. You could look across all of these major indices here. You can see essentially now we're starting to hit our head on the upper band across everything, just as the VIX is starting to challenge the lower band and actually close underneath it. So in the very short term, sure, some resistance here, some pullback makes sense, but I do still want to say that we held those lows. We made a pretty good thrust here off of them, and now we should keep an open mind as to which way, we essentially follow up on a bigger sort of weekly time frame. It feels like there's some room in here to even get back up towards the 4,600, but we're going to take it one day at a time, 1 week at a time. We also had OPEX, the option expiration this week, so we had lots of things sort of going on here in terms of catalysts and some potential, market moving action. So if we, tour a couple of these other markets here, we looked at them briefly, but the IWM, you can see that we did start to get back up to the above the 207 area here. So this is in fact the highest close now for the Russell 2000, going all the way back to January the 18th. So this is now, almost going to pushing back up towards year-to-date highs here. Not quite. Year-to-date highs definitely still have some more to go, but we are starting to now lift back up above this consolidation. Nasdaq 100, again, not quite taking out or just about taking out these March highs just now over this 349 area, and MACD rising, trying to get back into positive territory. And again, those nice consecutive strong closes. So lots to like here in the short term for price action. And we're going to continue to measure and map these levels heading into next week. Let's take a look at a couple of the other markets. We look at TLT and Treasury bonds, generally speaking, are pretty lackluster here. So we would have expected to see maybe a little more of a rally, alongside equities, but this is not really happening. We saw basically more pessimistic price action to start the week, and then we kind of, eked ourselves higher into Friday's close, but still not too impressive here for TLT, IEF, and this is again, inverse proxies to interest rates, which basically are sitting towards their highs. If we look at oil here, we saw a pretty sharp, break of this accelerated trend. We had about a 20%, I believe. Let's test that right now. Yeah, 23% pullback from the highs here in the USO ETF. And then we proceeded to rally about 10% into the end of the week for oil. So we'll see if dip buyers can, hold this potential higher low around 68 in USO. If we take a look at gold, you can see this is coming off of its sort of blow off or accelerated trend that was in place as well. So we had this very steep trend that really got underway here on the last piece of this move, all the way up to about 193 in the GLD. And you can see we had about a 9% correction in GLD since that top. And if we look at silver, you can see kind of a similar behavior here. And last but not least, if we look at natural gas, you can see this looks a little bit different, right? This one here did not have that big extreme, wasn't trading at year-to-date highs. This has been in a much different pattern than oil And, you know, even some of the other commodities out there, commodities definitely are starting to spread themselves out. Pretty different looks depending on what specific underlying commodity that you're looking at. So that, I think, really speaks to the big moves I want to talk about, mostly on the equity side this week. We looked at that price action. We don't want to claim that we are out of the woods and the worst is behind us, but I do think, again, just to reiterate the message here, that we want to pay some attention to the bullish price action that is emerging here. And, you know, we'll continue to measure and map these levels as we push forward. Next week, hopefully we can start looking at market breadth, market internals. We can start looking at some of the other credit markets and different things that we like to look at. I do have a couple of new screens and charts and ideas that I want to start sharing, but I'm going to have to wait until I get back into my usual routine before we can get back to those. So that's it for me on this shorthand version. If you like these videos, please do subscribe to our YouTube channel, and hopefully be back on schedule next Friday with our full-length version. Take care, have a good weekend, and we'll see you back here next week.